All right, hey there, good morning, everybody. Christopher Inks with Texas West Capital. It's a little bit after 11 a.m. Central Standard Time here on the 17th of September, 2020. That would be a Thursday here in San Antonio, Texas, where I am at, chatting with y'all across the world. Really excited to have y'all in here, and so many of y'all continue to come back, and that's really just such a fantastic thing. That means that either we're doing something right or you like to see a train wreck. So, our track record suggests we're doing something right. So there is that anyway. Hopefully y'all are doing well. Who's here already? We've got Hank is here. What's going on, Hank? Data's here. Oscar is here. Good to see you guys already checking in, saying hello. And of course, everybody else that checks in, we've got a lot more that don't speak. And, sometimes you just choose not to. Other times you can't because maybe you're listening at work or something. But we're really excited to have you guys join along as well. Hey there, LG. Good to see you. Zet checking in as always. Don't forget, guys, join us at howtotradetowin.com. Today is the last day that you can get in as a Tier 1 or Tier 2 member. So after today, you will not be able to get in as Tier 1 or Tier 2 for a while. We're going to go ahead and lock up access on those. You'll still be able to come in at Tier 3. But again, a lot of what we're doing is geared toward the Tier 3. A lot of the new stuff that we've got coming out is going there. I'll tell you what, if you want to know what people think about what we do on Tier 3 here, let me see here. I've got a few comments for you to check out here. So we had during the, I did my best during the training yesterday to try to grab some of these comments. Everybody's always commenting. But as you can see here, Wednesday training videos, this is what we do every Wednesday for Tier 3. It's usually an hour to an hour and a half long. And it's always recorded, so it's accessible at any time afterward. And if you, say, join today, you would still get access to all the previous ones we've done for the last 2 months now. But, again, Joe the Butcher here saying these Wednesday training videos are worth the Tier 3 price by themselves. KMG agreeing. We had a DC here admitting that they pay for a fair number of different research and education services. TWC has been the best for their bottom line by far. KMG's really excited. I like KMG, man. He's been with us for about 6 months or so. It says here, we just keep growing and getting better. I keep telling you guys, most of our members have been with us for at least 6 months. Many, many, many of them have been with us for 2 to 3 years. We've only been around for about 3 years now, 3 years this month. And we've got a lot of members that have still with us from day one here. And I don't know, again, guys, if you're looking for, I don't know, maybe he's just saying it. Maybe they're just saying it. Nobody's going to sit around and pay for some, for 3 years, and not, and just kind of stick around. It's a waste of money other ways, right? So when you see a lot of people coming in there, and they're sticking around, I mean, to me, that's what you look for. We had these other messages left here. Onyx King is a new member. It says this was after the video or the training yesterday. Said the educational was absolutely mind-blowing. Joined 2 weeks ago and learned more than you had in the previous 2 years. The indicators, we happened to show them some specialized indicators last night. It said they're so straightforward to use and you can hit the ground running, making gains with relatively little previous trading background. And that's one of the best things we do about the Tier 3 training we do is we give you a lot of mechanical ways that even if you've never traded in your life, you could actually come in and watch that training and go to the charts and immediately start trading successfully. And that's what, the opportunity is there. The ability to do that is there. And that's what, we've kind of geared that toward because it benefits you to understand what's going on in the overall market for longer term trading. But if you're just trying to get your feet wet and learn how to trade and have more of a chance of being successful, there are tips and techniques and styles of trading that you can do that will do that. Most new traders never heard of them though. Me having done this for now 25 years, a quarter of a century now, I've come across a lot of them. And that's what I share with our Tier 3 members every week. But it says the Tier 3 weekly educational is one of the gems of TWC because it teaches you how to fish for high confidence opportunities, which is exactly what we're trying to do with you guys. On any type of markets. Hands down, this is the best paid service I've ever joined. Well done, TWC. Keep up the high quality content. Amber Lee, of course, agreeing right there. Says Tier 3 is worth $1,000 a month. Easy. Plus. So, great comments there. And then KMG, of course, from earlier. This is K-Gans here saying, I've been trading seriously for only a year before I had joined TWC. Been here for almost 6 months now and can say that joining was one of the best decisions I have made, especially upgrading to Tier 3. It gives you just so much education for someone that's not as experienced, in addition to the content. So my daily updates and explanations of my thought process gives them something to emulate at times, to the point where they hear my voice over my shoulder, over their shoulder. But I think one of the best things KG has said here is that the TWC community is also a wonderful bonus. It really is, guys. I keep telling you, trading can be trading is a solitary thing, guys. You are wholly responsible for what you trade. It's nobody else's, nobody else is trading it for you. You're trading it. So it tends to become a very solitary thing. When you can find a really good group of people that are all seriously intent on learning and getting better and sharing knowledge between each other and, helping each other and discussing the things that I teach with all that, it just makes an absolutely wonderful place to be. And I think that's probably the real reason. Not that the stuff that I teach isn't worth it. I think it definitely is. But again, I mentioned that we've had members that have, remain with us for such a long time. And I think it's a big part of that is the community there. So I'm telling you guys, man, you should jump in there. Join us. We'd love to have you there. I don't always remember to do it. I'm a terrible self-promoter, guys. I kind of put my head down here. I do the work day in and day out. But I'm trying to be more and more, transparent about what we're doing as far as, comments and whatnot go. And, that's what we get. So if you're thinking about it, jump on it, get it done. By the way, I've got some mentions about Femix here. You guys know we partner with TradingView and Femix. Absolutely love both of them, guys. And one of the greatest things that's happened is you can now get Femix charts on TradingView. And I told you guys this was coming. It's there. I've also been mentioning for the last month or two that they had more assets coming down the pipeline that they were going to add. Those are now there. They've just added, let me see here, ADA, BCH, Comp, Lend, Wi-Fi, Algo, and DOT with up to 20 times leverage. And that's on top of what they already have, which includes Link that you can trade at 30 times leverage, up to. Now, that doesn't mean you guys go out there and you put your entire account down and you max out your leverage. That's how you lose money. But if you're looking for a way to reduce counterparty risk, if you're looking for a way to get exponentially greater return on your money, or you're looking just to kind of bump it up a little bit, that's the way you do it, guys. That's how you use leverage successfully. You don't go all in with everything you have and max out that leverage or really high leverage. That's going to lose you money. But if you pay attention to things we teach over TWC, you can use a leverage very effectively and end up a lot further ahead than where you expect to be. But anyway, they've got that there. So if you're interested, guys, and I would suggest you do it, and you want to show us some love, man, go ahead and use this link right here to get in there to do it. Again, we partner with them. We get a small kickback on that, part of the advertising that we're doing for them by telling them. But again, guys, you know me. I was talking about it before we were partners with them. It's just a platform I really like. They're really good there. So check it out if you haven't yet. Go ahead and check it out there. But anyway, so that'll do you there, guys. By the way, real quick here, I just want to make a comment here. I don't, I guess I do. I talk about the dollar and whatnot's going on there a lot because that's basically global liquidity. Dollar liquidity right now is what's driving everything, just in case you guys don't know. But Sven Henrik here at Northman Trader. You should follow his account. I'm telling you right now, it's a good follow. But speaking about that FOMC minutes yesterday, again, I talk about this. The same thing happened the last couple of times. Most of the people out there are going, oh, well, they're saying that rates are going to be low for zero, going to be around zero for the next few years. And that's great. That means, inflation and all this stuff going on. No. What the reality of it is exactly what he says here. Zero rates through 2023 is not an expression of strength. It's an admission of just how fragile the entire construct is. The BOE is discussing negative rates. The ECB remains deep in negative territory, and the Fed's at zero for 4 years. None could even raise a quarter of a point or everything else would collapse. That's the reality, guys. That's the reality. That is what you should be getting from the comments about the Fed. Not this nonsense about, oh yeah, we're going to let it run hotter than 2%. They've had 10 years of QE, and they have not been able to get it to 2%. I think over the last 10 years, I think they spent about 30 months at 2%. Out of the last 10 years, guys. That's less than a third of the time. And that's with all that QE that came out, which was exponentially huge compared to what was government was spending prior to 2008. It doesn't make a difference now that it's so much more now. Anything times zero is still zero, right? So, when you look at this, you have to think deeper into what's being said. Stop taking the sound bites. So I'm going to keep using that. I'm going to keep using that word because, sound bites. Because that was that word I couldn't get a week ago or whatever. But stop just concentrating on sound bites, guys. Do some deeper thinking. Most of the accounts you follow online are not economists. And even those that are still have a bias toward the Fed. People still believe the Fed actually makes markets do things. In the grand scheme of things, it really doesn't. And it becomes more and more apparent the further into a credit bubble you get, which is what I believe where we're at. So I think that's what you guys need to be paying attention to, not the sound bites. The sound bites are nonsense. They don't mean anything. That's why the dollar took off yesterday. Because people are realizing, well, the Fed's kind of showing, they can't really do anything. They can't seem to get anything going. They can say they're going to do this and that, but the fact is they haven't done it. They haven't, or they've done things, but they haven't been able to get to those results that they keep saying, oh, we're going to let it get there. Well, we're going to let it stay there. Well, if you can't get there, there's nothing to let stay there, right? So just some thoughts on that, guys. Let me see here. Let me see here. Why does, oh my gosh. Oh gosh. I tell you what, guys, if you come in here like that idiot, I'm going to say idiot because of how he came in here, this Armando Acosta person, man, just show yourselves out the door. You clearly have no clue what you're talking about or what you're doing. And, you're just trying to get some attention. Mama didn't hold you enough. I don't know, something like that. So good time stuff, right? Why are you making us waste our time with your stupid marketing sales speech? Because that's what I do. What do you think? You're going to get all this for free and you don't have to wait through a little bit of advertisement? Seriously? Thank God the rest of y'all are a lot better off than that. But see, this Armando person, this is exactly the problem with most of trading right now, with most of retail traders. They want something for nothing. They don't value anything. That's the problem. And if you don't value anything, what's the use? Why would I give you something for free? Something that you're not going to value. You sit through a couple of minutes of this and you can get some information. Good stuff. If you're going to be an idiot like that, get bent, right? Let me see here. Sorry you guys had to deal with that nonsense. Hey there, Devin. Good to see you. French Bull, what's up? Block Tech, Greg, good to see you guys. Spiral Architect is here. Kyle checking in as always. Let me see here. Alexander, what's going on, man? Oh my gosh. French Bull, what's going on, man? Rancam is here. Who else is here? Yeah, Kyle, man, definitely jump on over to Femix, man. Lots of opportunity with that now. Yeah, I would definitely do that. Let me see here. By the way, guys, just go ahead and ignore him. Obviously, the person has no life. I'll go see if I can give a few of you guys some extra privileges on there, and you can take care of that nonsense when it comes up. Sorry that you guys had to deal with it, honestly. Unfortunately, I can't, ban them before they act like idiots because we don't know who the idiots are. So it is what it is. But Casper's got the right word there. Says just ignore them. Just looking for attention. Yeah, Hank, in the end, it does depend on who wins. And, the reality of it is the dollar is still the king, right? So, you generally place your bets on the odds favored, right? On the odds in favored, right? If you're gambling, I guess, if you're a gambler. So, yeah, we'll see what happens there. Hey there, Sean. What's going on? Let me see here. Casper says, I think it's actually a common trend in all aspects of life. Everybody wants it for free. Nobody wants to learn or work for anything anymore. It really is. It really is. And it's unfortunate because it doesn't get you anywhere in life, right? How can you get anywhere in life if you're doing that? But you guys, man, you guys are fantastic. You guys know better. So I appreciate you all there. Hey there, Pedro. Good to see you checking in, man. All right, guys, let's look at what's going on here. Cameron, what's going on, man? I appreciate you, buddy. I appreciate you. Tal Walker's here as well. Okay, great to see y'all checking in. That could change, Hank. It could change USD as a reserve currency. Definitely. You know me, man. I've talked about that over the years here. But until it does, things are still there. Before we talk about this, remember, guys, why is the USD much less likely to hyperinflate compared to other countries? Because one, its place in the world. So the USD is the reserve currency. I can't say most, but I guess most maybe. What is it? Over 50% of the world's debt is denominated in dollars. Oil, petrodollars, denominated in dollars. But then you go on beyond that, and the U.S. itself is the largest exporter of oil, one of the largest importers in the world. Beyond all that, and I don't say this to flex or anything. I'm not this, U.S. better than everybody kind of thing. But at the end of the day, the reality of it is the U.S. military has boots on the ground in every freaking country in the world. We have the most advanced military in the world. And so why is that important? Because it allows the government to have a lot of flex over everybody else. It allows the U.S. government to get other countries to do what it wants them to do. So all those things together give the USD the least likelihood of actually hyperinflating. The countries that tend to hyperinflate are those on, lower down that don't have that kind of prominence in the world. Now, I'm not saying it can't hyperinflate ever. A loss of the USD as a reserve currency would definitely increase the odds that it could. But right now, if you step back, things are the way they are. And those things mean something. Yeah. Let me see here. The idea that USD can remain the reserve currency forever, I don't think that. I've argued against that for a long time. I don't think that's probably going to happen. Things will change. But, when does it change? We'll find out for sure. So what's going on here with Bitcoin? Let's see here. Last night, I talked about this likely being the top up here. This is that 11,100 area that I was talking about as that target. So we hit that. We rejected off. Last night's update for Discord, I told him that looks like it's probably the top and we're headed down. We did this morning. As of this morning's update, I gave them, price was right down about this area right here, coming off this bounce. I gave them this count here. It looks like a series of 1-2s. So 1, 2, 1, 2, 1, 2 kind of thing, maybe. Let me see. 1, 2, 1, 2, 1, 2. Something like that. Anyway, giving this a 1, 2, 3, 4. So I gave them the target right here, this red line. That's where we hit. And then I suggested that if we get that, then we should look at that wave 5 getting down here. A minimum of the EQ of this, I believe this is the 4-hour demand structure that I've had here for a while. A few days. And that actually is the 61.8. So bounced off of here, this EQ is the 61.8 there, 10,675 or so, is where we would normally expect wave 5 to get to. Now I've given you a yellow box there to give it a little bit of extra room because this is the swing low here. So it could push beyond that 61.8 area, potentially. But really just kind of looking for this to complete 5 down into this area. And then maybe get that would get you a 1, and then you get a 2 up. And that 2 up should get you back up here around 10.9, 10.950. So that gets you a 1, that gets you a 2. If it does that, as expected there, that really kind of prints this head and shoulders. You guys know how much I hate Head and Shoulders, and here I am talking about it again because it's setting up as a real likelihood here. If it does that, you've got your neckline here, which let me go ahead and change this to a purple line here so it's a little bit easier to identify with, with the pattern itself. There you go. And so what you're going to look for, if we get this move down here and then this move back up here, what you're going to look for on this is you're going to look for expanding candle spread and expanding volume. You want to see selling pick up as it's coming down through this neckline. That makes this much more likely to be a correct Head and Shoulders pattern. If it does that, then based on the height of the pattern, this gets you a target down here of around 10,245 or so. Now, if we look at this and we go, okay, this is 1, this is 2 here. Then wave 3, oh, geez, I don't even have this on there right here. Let me see here. Wave 3 would then get you, let's see, let's just go right from here to here. There we go, that's about it. It gets you right here around that 10,269 kind of area, right around where that target is. Now, again, guys, I've never heard anybody mention it before. Maybe they have, and I just haven't seen it. But as I continue to tell you, pattern targets, correct, proper pattern targets, are usually wave 3s. And so in this case, that would get you that wave 3 area. Wave 4 would pull back then to this, this right here. Let me kind of pull this out here a bit. So you get this wave 3 down here, and then wave 4 would hit the bottom. Let me get this over here. Of this upper trading range here. It would get rejected at bottom, and wave 5 would then bounce, is scheduled to bounce right about the top of this larger trading range here. This larger trading range. So, again, so what you see is it drops down, it bounces off the bottom of this small range, and then bounces off the top of this large range to complete that local one there. And you'll get a 2 back up to the bottom of this range, and your 3, 4, 5 will take you back down mid-range at least of this larger range. So everything just kind of going along as expected. There's no surprise in all that. It is what it is. So now we just need to see if it follows through and does it. Again, that's my expectation of it. As you can see right here on the 15-minute, even with this price rising here, OBV continues to drop off, which again tells you basically you've got this, what they call the smart money selling into, sadly what they say is the dumb money. And what they mean by dumb is not that the people are idiots. It's just that they don't understand how markets work. They're buying, they're buying what the smarter money is usually selling to them kind of idea. Now, is this done here or not? I mean, it could be. Again, if I look at this, I go, maybe it's an A and a B and a C up here. That would get you that 4 done at the 38.2. But, it is possible it could still come up to the 50% just above this pivot area. That would still be a valid wave 4. So what we're looking for now is a decline through this swing low here at 107.45. If you get that, I think you can go ahead and, short on down here toward a minimum here of this 106.74 area, potentially a bit lower there. And then you can look for a reversal there to long on up, back up here toward, almost 11,000. And then you'd look for a reversal off that and short on down, basically toward this 10,250 kind of area. I mean, that's as simple as you guys can do it right there. If we look at the daily here, depending on where the daily closes, I mean, this could become a bearish engulfing candle right here. If it closes below where this one opened at 10,785 and 23 cents. So if it closes below that, again, on a larger time frame, it's more of a clue we're probably going down. As I've been pointing out, again, we just have this overlap small candle spread as it hits this previous support. It hits its rejected. So again, nothing Nothing bullish really about all this, guys. It still looks corrective, especially in light of this right here, which saw, very high levels of selling still going down at the very bottom of the move here. Generally, if we expected this to be a reversal rather than a bounce, volume should have tapered off strongly down here at the bottom. Instead, it gets here, it gets here, it gets here. And in all here, while it's still kind of staying around these same lows and going sideways, you still have the same real huge levels of selling going on, well above what the averages were. And so you've got people that are selling just as aggressively down here toward the bottom as they were at the top. And so when you look at that and you're trying to decide whether something may be a bounce or a reversal, most often that signals a bounce here before further downside. Now, there's never any guarantees, guys. But when you look at this particular thing, and as I showed you the other day, it's even more prominent right here on the CME. All this regular volume is usually down in this area here. And then on this decline, you have the spike of volume. But rather than really falling off, you'll go, oh, but look, it's a little bit less. That's not the point. The point is the general area of volume is down here. And the entire way down, volume stays up here near the spike highs. All the way through the end. So, again, that's a good clue that that's probably just going to lead to a bounce and a reversal. Now, on the CME here, we already have a bearish engulfing candle right here, filling in this gap right here. We've got a gap a little bit lower, and then, of course, we've got our gap down here as well. If we look at the CME here, again, if I'm just trading pivots, and what I'm knowing is these large candle spreads coming down through the pivot, through the S1, through the S2, gets down about halfway, 3/4 of the way to the S3, and then we get a bounce. From this structure right here, I'm expecting just a bounce. I'm expecting rejection at the S1. Not really at the S2 because there was such a long drop. So there's going to be more coming into it on that bounce. But I'm expecting rejection of the S1, and that's what happens here. The same thing we've been talking about. Again, looking in terms of the structure further back here, same thing, same idea. This previous support just becomes this resistance here and leads to further sell-off. Now, obviously, if prices to go up here above the daily pivot, I might have to change my, what I'm looking at there. But generally, in the way that you trade pivots, you're looking at volume and price action profiles, everything else. I mean, you look at this, it screams just bounce here, further downside. So, I mean, that's kind of where we're, where we continue to kind of look at it for now. Let me see here. Let me catch here. Hey there, Crypto Girl. I'm Crypto Girl. Good to see you, as always. Let's see here. Brendan, what's going on? He says, we also got a nice TD9 on the daily. Where did you get a TD9 on the daily on? Let me see here. Because this TD sequential here, oh no, we did get a TD9. Look at that. We've got it on the daily here. So, well, there you go. There's that as well. So again, and one of the things you look at, guys, as traders, is you look for a confluence. Too many times new traders come in and they look at one indicator or one thing and they say, oh, look, it's doing that. In trading, I would never just trust one single indicator. I would look at the one indicator and see if I could find confluence with other indicators. So in this case, again, if I'm looking at pivots, I explained how I look at that. If I look at price action and volume, that finds confluence with the same idea it's going to come back down. If we look at the structure of what's going on here, again, getting rejected at that resistance, that's finding confluence with the other things that I mentioned. Now that TD9 coming up on the daily adds confluence to a possible reversal. If the daily closes as a bearish engulfing, more confluence there. So there's a lot of significant bit of confluence coming up there. But even with all that, guys, it's still, you absolutely have to understand that there is nothing guaranteed in trading. There is nothing guaranteed in trading, guys. Nobody has a crystal ball. None of us know exactly what's going to happen and when it's going to happen and whatever. But the more confluence of factors that you have, the more likely that thing is going to happen, which means you're increasing your confidence in that trade. And remember, in trading, it's not about trading just because there's a chance. Why would you throw out money that you don't have to throw out? In trading, it's about trying to find those higher confidence entries, those higher confidence trades, the ones that are more likely to work out. Because then what? You're going to have a higher strike rate. You're going to be less likely to lose money, which means your account's going to grow faster over time than what it might otherwise. Which is contrary to the way that most new traders think. Most new traders think that they have to be in and out as often as possible so they can keep those wins going and most people can't do that, guys. Can't do it successfully. It's very stressful. And you're having to trade shorter time frames. So there's a lot more noise. Noise is all the up and down that happens in that time frame. So zoom out a bit. Take on your more higher confidence trades. Don't enter a trade just because there's a chance. Because most of that is going to be bad trades. Even if just half of that's bad trades. And you could, maybe have, let's say you enter a whole bunch of trades just because, right? Just because there's a chance. You'll probably have, if you're lucky on something like that, you might have a 33% strike rate, okay? So you're losing a lot of money you don't have to lose. Now, you can still come out ahead, but you're still losing a lot of money you don't have to lose. Why is that important? Because what's going to matter most to you as a trader is compounding over time. And every time you take drawdown, that takes away from that compounding over time effect. You have to now make all that up and more, right? So if you look at taking just the higher confidence trade setups, you can take that strike rate from maybe 30 or 33% up to 50, up to 75% even. So now you're taking less trades, but the trades you're taking are more likely to be successful, which means instead of a lot more drawdown, you have a lot more profits, which accelerates your compounding over time. You guys absolutely have to get that understood. Otherwise, you're just going to keep feeding the machine. You don't want to do that. Let me see here. Hey, what's going on, Othmane? He says the retracement didn't reach the 50% tracement of the whole move down from 12.5. So we should have a B, then a C up. No? This retracement, let me see here. Locally, this 15-minute here. This? Let me see here. Let me turn this off again here. There we go. If you're saying this didn't hit the 50%, no. If I look at this count as a 1, 2, 1, 2, 1, 2 kind of thing, this gives me a 3 down here and a 4 down here, and this 4 hit the 38.2 of 3 here. And that's what I would expect. It also finds confluence with the high volume node right here. So the idea that we go above that, I'm real iffy on something like that. I'm not saying it can't happen, but I would expect more to get a rejection in this area than continuation up with it. Let me see here. Oh, no, that's not what you're talking about? All right, help me see if we can figure out where we're talking about more, and we'll figure out what we're talking about there. Let me see here. Let me catch up with you, everybody. Devin Christ, well, welcome. Glad to have you here. Hopefully you'll find a lot of useful information in here. It's more than just the charts. It's mostly about helping new traders navigate and understand how things go, getting you out of all that new trader stuff that you think you know when you first come in that ends up actually costing you money because it's not correct. So we do a lot of that here. Marathon Charts, what's going on, buddy? Let me see here. For the August 16th high on the daily. Okay, Othmane, let me check what you got here, bud. What's going on here? Oh, so you're talking about this here. Oh, okay. No, actually what I'm looking at right now is I'm still looking at this. Yeah, I see what you're saying. You're saying if this is maybe a 1, 2, 3, 4, 5, and then so this is a 1 and this is a 2, right? I still think this could potentially be a deep 4 here. I'm on the fence of whether this is a 4 or a larger 2, or would be, if it's a 2, then it would be a B potentially as well. Yeah, I'm on the fence about that at the moment. The rejection where it's coming at makes sense. Not that it couldn't go up a bit higher there, but there's a lot of things that make sense in this current rejection area. That would lead me more toward, everything else aside, those things I talked about earlier, keeping the wave count out of it. The idea, I think we're more likely to potentially, get rejected here than continue up. Now, again, no guarantees and anything can happen. But if I'm looking at that, I'm thinking more the other way there. And if we are, then I'm thinking this is potentially a 3, 4 for a 5. What we're going to have to see. The other thing is it could just be a shallow 2. It really could. If we're headed much lower down here, this could be a shallow 2. Again, if this is a 1, 2, 3, 4, 5 as an A, this could be a B. It'd be fine for a B, and then you'd have a C down. So I think a lot of it's going to be, if we're getting the reversal here as it looks like, let's watch how that price action and volume develop as it continues to move down. And that might give us a better idea of whether this is a 1, 2 or a 1, 2, 3, 4, 5. Or if this is, like I said, when I say 1, 2, you can substitute A, B in there as well. Because I think the most bullish possibility we have right now is that this is 5 waves down as an A, and this is 3 waves up as a B, and you got 5 more waves down as a C. I think that's the most bullish short-term option that's on there right now as far as the count goes. But, again, that's as we've been watching, that's what we'll continue to watch. And then we'll look from there and say, okay, well, does that count now get invalidated? Does it become more likely that it's a 1, 2, 3 or something? Or even in this case, a 1, 2, 3, 4, and then a 5 to finish out an A or a 1. So, yeah. Possibly. But, again, we'll see what happens. We'll see what happens here. For now, I think, based on the way that the counts are right now, I think the most likely thing is what we have here. But as it develops here, we might find that we're only getting an A, B, C down, and then we would have 5 more waves up to do the C that you're talking about. So this would be A, and then this would be, an A, B, C for a B, and then 5 up for a C. So that could still happen. For now, locally, even if this is, again, an A and then a B here, and then a C, it would be that way. Now, my other thought on that, of course, is, and there's so many counts that can come with this weird price action. But I'm going off of the whole idea of, if this is a 2 up, then this is an expanded flat right here. So you have a ABC up for an A, ABC down for a B, and then 1, 2, 3, 4, 5 here for a C as an ending diagonal. So, again, lots of possibilities in here. So we go with these shorter time frame things here. And as that plays out, we see, do they continue to feed into the next step of what we would expect for that? Or do they then maybe invalidate and give us different targets on that? Yeah. I can't for sure say it's going down there right now. Right now, with my count, it would suggest that whether this is a 2 or a 4, that we're headed down overall. So we trade those shorter term targets as it does, trying to get a better idea of the larger picture there. Yeah. Let me see here. So yeah, that's what I'm looking at. I can't say it's definitely not a B wave and then a C wave going up. Yeah, I can't say that off main for sure. But yeah, so we'll watch how this continues to play out here. And like I said, we can always adjust as it does. My big thing right now, guys, is the same thing it's been. It's this idea that we're going to at least come down here and fill in this gap. Counts and everything else aside, as I've been talking about since up here, we should come back down here and fill this in minimally. And that seems to be what we're at least leading to. It would be really strange to gap up here and to come back and to bounce off that gap and continue up. I'm not saying it can't happen. But again, when we're looking at what usually goes on with trading and how do we trade it, we tend to give more credence to the things that are historically more likely to happen. Because that's all we can do. We can't guarantee it's going to happen again, but if something's happened the same way, especially, many, many times in the past, then it's likely to continue on. And it would be very rare that we'd actually see this gap up here as a little island and continue up. So again, just looking at all the different ways we kind of look at things to figure out, well, what may or may not be happening. I always look at the charts without EW, Hank. That's what we're doing right here. That's what we're looking at right here. That's just what it is. We're going to see right here. If we get this pullback as expected, it goes down here. What happens here? Do we bounce off here? Do we have a 1, 2, 3, 4 with just a deep 4 and a 5? Or do we have this as a 1, 2 and a much lower 3 down here? Or again, if this is a 1, 2, is it maybe an A, B, and a C coming down further? Sure. Let me see here. Hey there, Silvio. Good to see you, buddy. Just glad to be on tier 2 there and do their education for free. We love having you there, bud. Always. So, this is kind of where we're at, guys, as we're looking at it here. Again, just from pivots alone, this move here suggests further downside. Whether that ends right here, around the S3 pivot or not, remains to be seen. But this strength of movement here, again, with the volume the way it is, all the way down into the bottom. Remember yesterday, I kind of gave you that analogy that generally when price comes down and then reverses, you can think of it as if you're in the pool with somebody and they push your head underwater and then let you back up, right? So it's strong at first and tapers off a lot at the end. If it's just a bounce, because there's a trend coming in, the trends to the downside, often what'll give you a big clue on that is all this volume continuing to stay at the highs all the way through the very bottom of the move down. And so that's the same thing as somebody pushing your head underwater and pushing it all the way down to the bottom of the pool and standing on your head there and holding you there. That's what this volume is doing right here. And when you have that kind of volume on that move like that, the relief, this just becomes a relief bounce here, and you should expect more selling to continue on there. But I don't see anybody really talking about that, Now, again, it doesn't guarantee anything, but generally that's the kind of thing we look at. Here's another example here where it's not quite the same thing. You get this volume here, all the way down through the bottom, and then it pushes back up. Little bit different situation going on emotionally here than what's going on here. Remember, this was all that declined dollar liquidity issue and whatnot. And then potentially, BitMEX's engine and the way it was working there, kind of keeping prices selling down into all this. So, if this is a lot of that BitMEX issue, then, and of course it follows through with the other markets because they see that it continues to push down. Everything plays a part of the markets, the price discovery there, so that would make sense there. But definitely not the same thing going on in this area as what was here. So that would be the difference in case you're going, oh, but look, it's doing kind of the same thing there. Yeah, you did notice that, yeah, but kind of a different thing in that situation right there. Let me see here. Hey there, Jordan. Good to see you. Let me see here. Again, guys, end of the day, let me see, where's my other chart here? I've got our bigger chart here we'll look at. Let me see, is this it right here? Yeah, this has got a couple of larger possibilities going on here. Again, the idea that maybe this is a large triangle playing out, it could be. If it is, I would still expect price to get down to this 6,000 kind of area here where this high volume node is to finish out what it is. If this is an A and a B and a C and a D and an E. So I would expect it to get down here toward this high volume node area where you've got all this before it pops off. So that's something we're still watching, as always, guys. The other possibility we talk about is this maybe being a W, and then we've got a triangle here as an X, and then we have a Y down. So in this case, you'd have an A, B, C, D. E would probably come back up here, around this 9,500 area. And then you'd have Y coming down as an A, B, C. That's a possibility still as well. I mean, there's lots of possibilities in there, but if we look at this, let me see if I've got it in here. Again, well, there's that right there. That was the other thing we were looking at here on that. If we look at this in terms of, Wyckoff, switch that to the monthly here and take a look at it. Something I've done before with you guys. Let me see here. There's nothing that's changed in terms of that. Oh, doggone it. Got to get this on the right time frame. Let's see here. There we go. And so in terms of Wyckoff, potentially what this would be is there's a reaccumulation thing that we call a reaccumulation after decline. And so this would be the decline. So this would be the greatest portion of the sell-off in here. And then it hits this low down here, and this creates the bottom of the reaccumulation range. That's your local selling climax here. You pop up here to the top, which gives you this automatic rally, which is, again, more distribution coming in because now you've got this range. You get this boom up, bomb, pop up, and you should drop down below the range, potentially, before heading up. And that kind of fits in with this idea that a W, X, Y, or a W triangle is an X and then a Y coming down. But again, it would just be one large reaccumulation range. You say, but why, Chris? Why does it have to be so long? Well, because if this is, again, bringing in Elliott Wave to give you some context here, if this is wave 1 and this is wave 2, this wave 2 is correcting this huge 10 years of wave 1, guys. This wave 2, this wave 4, this wave 2 is only correcting this little bit of wave 1. This wave 4 is correcting this 1 through 3. This, what would be, this is a 1 here, 1 full wave, and this is 1 second wave here. This has to correct 10 years of speculation. Because that's what all this is, guys. Don't let anybody lie to you. Fundamentals, blah, nonsense, bunch of BS. People are buying Bitcoin right now because they expect it to go up in value. That's it. That's why people are buying it. MicroStrategy, they come on there and say, oh, we're using it as our, as our treasury's reserve currency. Not because they expect it to hold the value. They're doing it because they expect it to rise in value. Everybody's buying for speculation that's going to continue to rise in value, guys. So you have to correct 10 years of excessive speculation. Taking this thing from just pennies to 20 grand in 10 years, or less than 10 years, what was it, 7 years? It's going to take a little bit to correct all that. Again, the idea that it drops down below 3 here, it gets rid of anybody that's bought in here. I mean, the goal of that really is not even what's happened here, but it's what's happened here. Anybody who's bought in here has never really been threatened. Right here, especially between, 1,200 and 3,200 here, basically. Price, if you bought in this area, you've never really been checked. Price has not checked you. You've been profitable. So a drop down into this area puts you on notice. And now we find out, are you really a holder? Or are you going to get rid of it? And for the market, that movement is to cleanse itself of those who are intent to sell. Because in order for price to go up, you can't have supply continuing to be dumped onto it. You can't. If you have more and more supply continue to be dumped on it, shorter term holders basically, how do you expect price to make its way up to 50 or 100,000 or something? You have to clean them out. A decline here below that 3,000 would be that shakeout. Notice, I didn't say anything bearish about this at all. Notice, everything I've said about this is bullish. The idea is to give the market the ability to move up. What have we done so far? We got here, got rejected harshly, came down. Get up here, getting rejected again. That's supply coming in. You can't have that kind of thing impeding movement up if you expect it to continue to rise. So the market checks the participants. Only the most staunch holders from, basically, I guess you could even say, not even these right here. All the way down here, they haven't been checked. Basically, really, you haven't been checked for that range there. From this range down here at about $160 up to about $3,200 or so. You haven't been checked. So this move back down here checks you. And it makes sure that if you're really intent on holding, you're going to hold. If you're not intent on holding, you're going to sell. And those who want to become these down here get their chance right there. Take it up. The DeFi craze right now should be ample evidence. But everybody's like, oh no, it's the beginning of a bull run. This is a bull run. It's just starting. No. That DeFi craze going on there, where all it is just about getting in before everybody else, and everybody's getting on there, and people are making all this money every month. That doesn't happen at the bottom of markets, guys. That happens at the tops. That's the wild frenzy, the euphoria that goes on in there. Remember, I said a couple of months ago, or a month ago or whatever, a month and a half ago, I started talking about the euphoria across all the markets, and I got a lot of heck about that. Oh, yeah, these markets aren't euphoric. Man, if you think these are euphoric, you weren't around in 2017. Actually, I was. And I've been around in all markets since 1995. It's euphoric. The stuff that's going on in the stock market that led up to where it went now. What's going on in Bitcoin and cryptocurrencies is very euphoric. But these are things that most people are not going to understand until they've been through a couple of cycles. And they start seeing it playing out again and again. Again, all those other products, mini contracts, micro minis, both with contracts and options there at the CME, Schwab Slices, Robinhood, where they're allowing even the littlest guy to get in there and buy just a portion, just put in the little bit of the money he has or she has into the market. These are things that historically happen at the tops of markets, not at the bottom. Similar things happened at the top of the dot-com bubble. So, again, does that guarantee it's going to go down here? No. But if I'm looking at it, I'm going, well, that's a lot of confluence of factors right there, things that we normally look at that we should be very cautious. My goal here, guys, isn't to get you to believe me just to believe me. My goal here is to explain things to you and let you know why we're looking at things the way we are and what they really mean. You can come up to your own conclusions. That's all. That's fine. But just be sure that you're protecting yourself, that your risk management is dead on, guys. That's what it's all about. It's not about being right or wrong. It's about being able to protect yourself if you're wrong. That's the secret of trading, guys. It's not Elliott Wave. It's not Wyckoff analysis. It's not supply and demand structures. It's not, all these things. It's not some automated robot trading for you. Those aren't the secrets. The secret is being able to protect yourself if you're wrong. Kimo, what's going on, man? Says, I like your expanded flat idea as a 2 on the 15-minute. What if that is just an A wave up, down for being an impulse C wave to get everyone long, then dump? It's possible. It's possible. That's why we're looking for a decline below that swing low on that lower time frame. Yeah. Again, nothing's definitely guaranteed. You should always have validation and invalidation levels when you enter trades, guys. Always. And they should be based on, real reasons, not just, I just think that makes sense to me. Or that just seems like that would be an area. Try to have real reasons for your invalidation levels and your validation levels. Let me see here. Kyle says, so that drop to the Y would be the flush. Exactly. Guys, I know if you look at this, you go, oh my God, if it drops from, 10 or 11,000 down to 2,000 or something, that's so bearish. Again, my view is this. This is my view. I'm not caught up in the 15-minute time frames here on my view of what's going on. So to me, this move down is not bearish. This is completing. This is the final move to complete the correction here. This was bearish. This is just the final move. If you have to have something, this would be it. This is just the final move to complete this. Once that's done, it should be done and head up. To me, this is the most bullish thing that we could hope for. Because it sets up the market for the run that you guys are looking for. And it gives you opportunity to trade along the way down and to buy, if you really want to buy down at the lows. The reality of the lows, guys, a lot of people say they're going to buy at 3,000 and 2,000, whatever, but the reality of it is most people won't. Because they're going to be scared. And that's not anything to be embarrassed about or anything to be wrong about. It is scary to buy when everybody in the world is selling, it seems like, and everybody's talking about how it's going to nothing. It's really hard to buy at that time, emotionally. It's a lot easier if you're using money that it doesn't matter if you lose it. Which is what you should be using in the market. But, again, most traders, especially retail traders, they use money. They use more money than they should, which is why you guys become very emotional when price rises or when it falls, because you have a larger stake in it than you should. You shouldn't be emotional if price is rising up or down. At least very little emotion. But, as human beings, it's easy to get emotional. But it's easier to get emotional when you have a lot more in there than you should. So, a lot of possibility and all that, guys. And again, nothing of what I say guarantees that price is going to go down to 2,000. But if you're out there blindly just thinking this is the beginning of some bull market and you can't see the possibilities that might take it down, guess what you're going to do? You're going to buy up here, and then you're going to sell when it's way down here. And then you're going to watch it turn around and go back up without you. And why are you going to do that? Because that's what everybody does, generally. And then they get back in, maybe, once it breaks that all-time high. So the goal is just to keep you guys aware of what the real possibilities may be that's going on there as it gets into it. It's nothing in here that guarantees that things are going to do anything in particular. Let's just look at it. So right now, what I'm looking for, if my count is correct here, is I'm looking for a decline down here below this wave 3 swing low. Get you a minimum target down here of around 10,670 or so, 10,675, somewhere around there. But potentially this whole yellow box is a target here, which is 10,604 to 10,674. So basically a $75 target there. So if we can get a decline below that, I'm looking for a bounce out of this area. If we can get that, I'm looking for a rise up here to around 10.9, 10.950. And then I'll look for a rejection out of there down here toward 10.250 or so. Easiest way to put that. Hank, speaking like a trader here, says, I only care if it moves, don't care about direction. And if you're a trader, guys, all you should care about is that it moves. All you should care about is volatility. Doesn't matter what happens when you're not trading. Doesn't matter what happens when you don't have a chart in front of you or whatever. All that matters is what's going on when you're trading. But again, too many times new traders, they come in here and they get hooked on this and they think they have to stare at the charts for 24/7. And that just creates a lot of stress in them, which leads to emotions. Emotions lead to bad trading. It leads to lost money. You absolutely have, guys, if I can give you a bit of advice here, one of the best things you can do is to say, listen, I am only going to trade these days out of the week from this time to this time, and then stop looking at the charts and doing trades anytime other than that. Just do it when you say you're going to do it, and don't worry about the rest of it. All you care, it doesn't matter what happens when you're not there. You're not, most of the time, guys, you're most likely not going to get into any big moves anyway. I mean, and that's not to be rude, that's just reality. As traders, you're going to miss most of the big moves anyway. Or most of those moves when they happen. So why stress out and create all this stress for yourself? Remember, trading should give you two things. It should give you time and it should give you money. That's freedom. Time and money are the only true freedoms out there, guys. And you're not going to get those from government. Trading should give you those things. If they're not, you're doing it wrong. Now, maybe at the beginning when you first learn how to trade, you spend more time learning. But in general, if you're trading, that's what you should be striving for. Less time trading, more profitable trades. If you can do that, then you have a whole bunch of free time to do the things that you want to do. And you're like, oh, but I want to trade. Okay, whatever. But, again, give you time to spend time with family, time to give back, to volunteer if you want to. if you enjoy your job, more time to be more productive at work. There's a great bit of freedom that comes from having a source of wealth or a source of income of money that it doesn't that you don't have to really depend so much on where you're working. So, a lot of people I know actually enjoy the jobs that they do, but they hate the stresses of the bills and what they're getting paid and that stuff. But they love what they do. So if you can get rid of those stressors by doing this on the side, it allows you to enjoy what you do. And that, again, guys, that's the goal, right? Casper says, personally, I find it very frustrating that people classify others and things as bulls or bears. Overall, there is price moving in cycles, and whether your opinion is it's going up or down at present. I agree. And whether your opinion relates to where you are in a cycle. So, in idea, backlash of being a bull bear is irrelevant, really. Yeah, exactly. Agree. Dana, what's up, man? He says, 3 years I'm watching and learning. Now you tell me that we need actual reasons to trade. I thought we were doing this just for fun. I love it. But anyway, I got to get out of here in a minute. But let me look at DXY here real quick, guys. So DXY, strong move off the Fed minutes for the reason I explained already. That's why the dollar popped there against it all. Right now, still, man, this is just such a deep two, but it's such a weird ABC, just a very slightly lower C. But nonetheless, still looking at this as a 1-2, 1-2, working on a 1-2 here. Right now, bouncing at the 15-minute pivot, 65% retracement. If it continues lower, I'd look for that 78.6 right there. It looks like it's an ABC, but again, could potentially finish up that C down here. And if it does, again, looking for this move up here toward this 94, eventually up here to this target up here at around 94.20. If it happens to drop down below this swing low here, that's the other option I've already talked about. Basically, this would be a flat. So you'd have an A, B, C as an A, and then A, B, C here as a C, B, I'm sorry. So A, B, and then you've got 1, 2, maybe a 3, 4, and a 5 coming down here right around these lows, or it could go lower to finish off just a flat, a wave 2 flat. That's kind of where we're looking at right now. I don't see anything bearish on what's going on here at all, especially when you look at the FXC pairs or FXCM pairs, your Forex pairs. Almost all of the dollar pairs are extremely bullish for the dollar and bearish for the currency it's against right now. Not all of them, though. USD yen kind of looking iffy. But yeah, Euro USD looking great. USD CAD looking great. USD cable looking great. Or I guess it's cable USD there. GB cable versus the dollar. Looking great for the dollar is what I'm saying on all these. Looking poor on the other side of it. So we'll see what happens, But it seems like things are generally on the sides of the bulls right now for the dollar. So basically those that are trying to long it. So we'll see if it continues up. But really, guys, you get good. You should feel really good about it if you get through this descending resistance here. That's that large channel here coming off the top here. So getting that move out of that should be a good indication that that bottom's in and we're good. Until then, just continue to be cautious. Don't assume. And just work with it as it goes there. So, I'm not biased, Hank. The Euro USD does not look like it can go both ways at the moment. There was the possibility of maybe a running triangle, but that got thrown out the window this morning with the drop. That invalidated that option. Sure, it still has to go down below that wave 1 swing low, but the market looks a lot more likely for that than the other way. That has nothing to do with bias. It just has to do with looking at the chart. So we'll continue to see what's going on there. The Euro USD, to me, looks more, if you'll use the term bearish, than the DXY looks bullish. We'll put it that way. I still think this is it still looks more likely bullish than not, but the Euro USD to me looks a lot more bearish than the DXY looks bullish, if that makes sense. So, I didn't say that the DXY bottom is definitely in. I haven't said anything's definitely in. I said, I think it's probably in. I said, it looks good right now, but I said, if we get through this descending resistance here, it's most likely in. Same thing I've been saying for days now, or I guess weeks. Same thing we talked about over here. Even when we thought this might potentially be the bottom, but we had, questions. Still talking about has to get through this descending resistance over here. So, anyway, guys, let me get out of here, man. I'm already 15 minutes over. Always appreciate you guys coming in. Sorry you had to deal with the idiot at the beginning. I wish that there was some way that I could just kind of keep those people from showing up, but it is what it is, guys. Don't forget, we'll be back tomorrow, 10 a.m. Central Standard Time. Or I'm sorry, no. Guys, I hope you didn't just turn off the video then. 11 a.m. Central Standard Time. And we'll talk about all the markets. We'll take a look at gold and silver and oil and heating, natural gas. Maybe we'll look at some FX pairs, maybe. DXY, of course, Bitcoin. If you guys got some requests tomorrow, we'll probably take a look at a couple of those as well. Stock market, all those things. Kind of look at all that, and as we usually do on Fridays there. But again, guys, we'd love to have you. Join us over here at howtotradetowin.com. You see a lot of our members here in the chat while we've been watching this. Great group of people. They'll really make you feel welcome. But tons of education and opportunity in there. So there you go. You guys have a great day, all right? Take care, and we'll see you tomorrow. If you're over in Discord, of course, we'll see you over there in a bit, right? You guys are great. Thanks so much for being a part of what we do. Remember, the only thing you control in the market is how much you lose. So no matter everything that we just talked about, no matter how good or how bad something may or may not look, at the end of the day, there are no guarantees in trading. So you're going to put yourself a lot further ahead if you spend more time working on your risk management than anything else. All right? You guys have a great day. Take care. We'll see you tomorrow.